today's dynamic business environment, it becomes very important for any company to stay ahead of the game. On that note, welcome to Going Public, a show which explores the transition that a private company makes in listing itself on the Colombo Stock Exchange. Now, during the past 2 weeks, we have explored the success stories of many companies who have taken the step of going public. And this particular show is a collaboration of the Colombo Stock Exchange, the Securities and Exchange Commission of Sri Lanka, as well as MTV Sports. So on that note, I will hand you over to the very capable host of the show, Mr. Vasula Premawardena, who is a former director of the SEC as well as a capital market analyst himself. Vasula, over to you.
Thank you, Amaya. Here with us is Arjuna Herat, Partner Advisory Service Ernst & Young, President of the Institute of Chartered Accountants of Sri Lanka, and of course a Commission member of the SEC. And also Mr. Rajendra Tyagaraja, Chief Executive Officer of NDB Bank, Deputy Vice Chairman, Chamber of Commerce and Industry. Welcome to Going Public. Let's get straight on with the questions. Maybe both Tia and Arjuna can answer this. Do you think the present economic situation or the environment is all right for companies to get listed? Arjuna?
Yeah, I think it's very much conducive, because if you really see, today we are having a low interest regime at this moment of time, and stock market becomes a good alternative for investors, yielding a fair amount of a fair return. And so from a demand side, if you really could see, there could be investors who would be really interested in stocks and debt instruments that are yielding well. And from a listing corporate's point of view, the price multiples that prevail in the market now looks very reasonable, allowing them to realize the right value for their companies and corporate bodies. So all in all, and also given the potential that the country has for growth and development, I think there is optimism for growth in the stock market. So if you take all this into account, I believe the economic conditions are very ripe for a takeoff in the capital markets and the stock market.
How about you? Anything to add to that?
Yes, I think endorsing what Arjuna says, there are a few other things to also bear in mind. The country today is without the most critical risk which it faced during the past 3 decades, which was country risk with an internal civil conflict. And without that, certainly everything else, I think, is relatively in a lighter scale. So I think the optimism is very high. The second thing is the country itself is bracing itself for a different degree of growth in the next decade in relation to the previous decade. So there is certainly an incentive for the capital market to also play its true meaningful role in the nation's economic growth. So there is an opportunity. Of course, saying that at this particular juncture, we are seeing some profit taking from some of the international institutional funds because of a general exit from emerging markets and profit taking. But that is, those windows come and go, those spots come and go. And I believe for every little glitch where a foreigner goes out, there will be a domestic who will buy. So I think that should not be a dampener. I think the overall macro fundamentals certainly point in the right direction for listings.
Right, of course. I mean, given the history that we have dealt with over the last couple of decades, this is certainly seems to be obviously a better time to list yourself in the stock exchange. So talking of which, as from a chamber's point of view, the companies that you represent, have they been holding back, or is it the fact of not having enough knowledge, or what is the factor that may not have, they haven't come in on board yet?
See, a decision to list has to have a compelling reason. More often, the need to access the capital market, and generally a business tends to come to the capital market for long-term financing after exhausting the natural means, which tends to be bank financing. And unless a business is growing at a speed and scale where it is reaching out to a different paradigm, very often it sits in its own comfort zone, surrounded by liquidity in the banking system, supporting its short to medium term requirements. So there is a very little incentive to dilute ownership and look at listing. But for, I think, the environment, as I said today, with the country thinking big, the legislators thinking big, the policymakers thinking big, I think it's also an opportunity for the businesses to think big and to look at this source as a meaningful, cost-effective, long-term effective. Now you see, probably the best example we could see is the John Keells, when they have decided to look at a different scale in its paradigm, looking at a $800 or $850 million investment, which is probably way beyond your typical bank financing.
Right.
It is certainly an important ingredient, but they realize that you also need to go to a different level and diversify. So then there is a compelling reason to come into the market, even if it was already listed, and say, look, we will use the market as an effective tool to raise part of that money. So that scale and the ambition to grow beyond your normal comfort zone is also a compelling reason for motivation.
Right, of course, as say scale or size matters. So anything that you can add, Arjun, in the sense, if you don't have a project that we are talking of these scales in, say, hundreds of millions of dollars or billions of rupees, even for, say, a medium size enterprise, what are the advantages of being listed?
Right. So if you really see some of the misnomers that the corporate bodies have in trying to list, is that the fear of losing control of ownership. Now that's one of the primary factors why a company may not list, and we have found that in the SME sector especially, that becomes a critical factor. The other factor is about not being able to get the right value for the stock. Now there is no better place than the stock market to actually assess the value of a company, because you access a wider shareholder base, wider investor base, and that itself is a very good catalyst to get the right price for this stock. So in terms of for the SME and the small and medium scale enterprises, mobilizing funding is a good reason why you want to be in the stock market and to get listed. And in fact, today as it stands, I believe that you could mobilize funds at possibly a better rate than the conventional sources that you have, because the interest rates anomaly we had in the country is no more, and the procedures of listing has been eased, which allows corporate bodies to list fairly easily, and that allows, and also given the pricing is now fairly, is reasonable, you can mobilize funding at a very reasonable cost and in an expeditious manner. Now that's definitely one of the reasons you may want to list. And also once you list, even if you're not listed, if you have not listed your equities, you can even list your debt. You can actually issue debt and get them listed and raise funds through a debt instrument. And today even the debt instruments are fairly well priced in the market, allowing them to raise funds at a cost effective way. The other aspect is about the companies being able to go to market on a project basis, as opposed to the conventional sources. A lot of the time may require collateral, may require the company background strength, would require sometimes guarantees. If you are going to stock market, you have opportunity of offering a project for which you are mobilizing funds, and the project may get rated, and the debt instrument or the equity instruments can get rated, and you can mobilize on the basis of the project cash flows. So these also provide an opportunity for companies, if you have good projects, to go to market and raise funds. So all in all, it's a good source to mobilize funds, and definitely no doubt about it. And going forward, given the development and growth the stock market is having, I think it will be a good source for SMEs to effectively stay.
Certainly. In fact, I can remember a time, I think, when NDB and DFCC were actual development banks. Part and parcel of the project financing and the process was of the company to go public, in 3 years' time, 5 years' time. But somehow or other, we didn't see that happening. Again, coming back to the Chamber's side, from the corporates that are not listed, what is holding them back? Is it size? Is it the bureaucracy?
Well, I think it's a combination of factors. One is the size, and as I said, the need. Are we growing at a sufficient speed to go that extra mile, or can we be happy with the traditional sources? That's one. The second thing is, of course, you've got to bear in mind, however attractive this is as a tool of raising money, when a company decides to go public and list, it has to realize that it is no longer me doing it my way, because now you are inviting the general public also to take part ownership in this business, and there has to be a certain decorum and a framework in which the company is going to have to handle this manner in terms of a governance structure, the ability and willingness to have outsiders to look into your books and your business model, to be able to respect the views and the needs of minority owners, not only majority, which means paying a fair dividend at a reasonable time, having a set of books which are prepared in a transparent and a robust manner. All those have to be a part of the journey, not just going out there knocking at the door and raising money. And secondly, it's not just a one-off exercise in preparing itself to go into the market. You also need to have the right mindset of those promoters to be able to walk the talk and keep on raising the bar of expectation once they go into the public domain. And that's not something which everybody, every business is willing to do.
Right. Let me interrupt with that. We will be back after a short break. Welcome back to Going Public. Yes, Tia. We were talking about the reluctance, perhaps, or the perceptions with the private companies getting listed.
Yes. So to add to what I said, there is another factor which is also emerging in the domestic capital market development. That is the gradual birth of the private equity group of investors. And this source of funding is, I think, a very important ingredient in the overall supply chain of capital markets financing. And why do I say that? Because when an SME or an emerging corporate decides or thinks in terms of getting bigger and looking at the capital market, it is not something it can overnight just open the tap and say, I am ready to list. There are a whole set of preparatory work the company has to do in terms of, say, getting its accounts not just for 1 year but a series of years in line with what is expected by a typical stock market investor, in getting the regulatory, the compliance act together. Now, unlike, say, 10 years ago, today we have another emerging source in the private equity who are willing to invest pre-IPO in some of these businesses with a good business plan, willing to hold hands with these businesses for a certain period, and then along with the business encourage listing. So then that is another, perhaps the reason as to why we may not see so many rushing to the CSC for a listing, because you now have another inherent buffer which creates that additional support structure.
Right. But of course, going back to the private equity investors, they also presumably would want an exit and would drive the company towards a listing.
Absolutely, and that is why, again, while that source is increasingly emerging in Sri Lanka, that itself may not attract every business which is aspiring, because a commitment to an exit strategy, a commitment and willingness to work with a group of intensely smart investors who will turn on the radar on a regular basis, but on a positive basis. But you need to have the mindset to be willing to expose yourself to that radar. Right? So those are some of the challenges I think some of these businesses are facing. But I would say the key to all this is the business growing and willing to take that quantum leap to justify the scale of financing to go into the exchange.
Arjuna, of course, as Ernst & Young, you have been advisory to perhaps many companies being listed. So how do you answer what Tia was talking about, this fear factor perhaps, or the reluctance, and which kind of limits your growth in one sense? Is this real? Is this actually in the reality? Is it real, or do you think this is something that we can overcome?
No, as Tia said, what people may not realize is that the value proposition of listing. If you really see, people see the continual listing requirements, the requirements to adhere to best practices in governance as a burdensome aspects. Now, once you put in place the processes and the systems to be able to fulfill these requirements, these are aspects that happens automatically, and that focused manner in which it's been done definitely creates value to corporates. We've seen that, and there is in fact research data which shows that the value proposition is great. If you talk about the requirement to, let's say, have internal controls in place to ensure proper financial statements are produced, if you talk about the requirement to have risk management practices in place, if you talk about the requirement to have independent directors,
so these are all good things.
All good things which adds value to business. So, so the proposition that I am trying to elucidate is that this fear of having burdensome processes and systems to adhere to when you list, and the cost involved in that processes will pay for itself because the value proposition is greater. And the other aspect of people losing control, I spoke about it earlier also. We have very clearly seen if the company, as company grows, and company goes larger, we have seen companies, actually owners controlling companies with stakes in the range of 30 to 40%.
Right.
So you don't really need to have 51% to have a control, because it's so widespread. The company is so large that there is no way someone could actually come and take control that easily. And also, as you very rightly said, the second generation of people are now well educated overseas. They've seen the sophisticated corporate environments, and easier for, I think, the families to get the second generation to come. If you have companies which are listed, which are actually more professional, and to attract the second generation to come and work for those companies, and also to contribute to the growth of the corporate sector, I'm sure it'll help.
So what I'm saying is, of course, there are benefits that overrides certain
very much
cumbersome procedure that may get in your way.
If I can just take on that question, that particular from where Arjuna left, I've had this ongoing conversation for about 7-8 years with a a listed large company, but which is very quiet and very protective of its heritage and whatever they do, and to the extent that they would even consider at some stage delisting,
Right.
because they control a large stake. But over the years, at least the last 2-3 years, the conversation evolves around a listing, because now you're thinking of raising the scale way beyond what you were doing in the past 8-9 years, and suddenly you realize that bank funding is not going to be enough. And to the extent that I recently saw one of the family members at one of the CSC forums, which is something I would have said was unthinkable 5 years ago. And when I asked that particular individual, what made you want to go? And he said, I realized that the day we now need, we cannot suddenly just go to the market. You need to start to engage an investor community. You need to start to communicate a story, and you need to be consistent in that story for a certain time before you go and tap the market.
Right.
So now I think generations are realizing that you need to build a rapport with the industry before you can go in. So it's very important to be engaged and be ready for the right time.
Right. Excellent. Excellent. So Arjuna, going back to some of these cumbersome processes that which people are fearful of, the corporate governance, for example. What is this process from your point of view, that a company that is being run basically by itself, quite had a free hand, but however now they want to get listed. So of course you don't want to start your processes post IPO.
Yeah.
What is the process? What are the corporate governance structures that from a accounting advisory level that you can bring on?
Sure. So if you really see the corporate governance code that's in place today, issued by the Security and Exchange Commission, is actually a voluntary code. It's a code which lists the best practices. So now, it gives the guidelines and the best practices that you could adopt. Now, when a company is actually to list, it's very important for them to look at these best practices and see to what extent they can adopt these best practices. And I must say that a lot of those are not too difficult. I mentioned some of those earlier about independent directors. Of course, you need to get good independent directors who could add value to business. It's about forming nomination committee, remuneration committees, the risk management committees. So so you need to have in place those committees and structures in place. Now, a lot of the time, to comply with these requirements in terms of let's say continuous listing requirements that will come post listing, you have to put in place processes to capture data and information in a timely manner, so that meeting the continuous listing requirements become easier and not onerous. And today we have technology which does that very easily. So in terms of publishing quarterly financial statements, having yearly audited statements out on a timely manner, I don't see it as a huge issue with technology in place. And in terms of capacity that has got built in companies today, that I don't see it as a big issue. And putting in place a process for that is not too difficult. You have list requirements that needs to capture the related party transactions, directors' interest. That is also a process that you need to have in companies to capture data as and when it happens. And you have oversight on these processes through a relevant committee. So if you really see, all in all, it's about preparing yourself for listing would mean actually forming the right committees and the structure, the hierarchical structure that will have an oversight on this, and putting in place the processes. So once those are in place, of course, it's about adhering once you're listed to the requirements that possibly required. Yes.
Sorry to interrupt, Arjuna. It's time for another break, and we'll be back shortly. Welcome back to Going Public. Arjuna, yes, we're talking about the challenges perhaps of the corporate governance or pre-IPO corporate governance processes, as you were saying.
Yes. So, as I said earlier, it's a voluntary code, and you actually take on board what possibly is best suited for you in the circumstances that you are placed in. While the SCC and CSC has some mandatory requirements that they have brought in from this code as a mandatory requirement, which are about the requirement for independent directors and with some other things that I spoke about.
Right.
So those aspects can be put in place, and I don't see it as a major challenge. And as I said, in fact, the professionalism that comes out of this whole process and the value that you derive it from being able to mitigate risk, identify risk, will pay for the processes that you put in place. So all in all, it's not a very burdensome.
It actually benefits the bottom line.
Benefits the bottom line, and you need to have a little bit of time to have this put in place, because you may not be able to find overnight independent directors. You may not be able to find the technology tools that are required to put in place to put this. To put the processes in place. So if you do, so you need to buy some time to put this in place, and post IPO, this the process will be very smooth, and it just happens. So for my I don't think it's really a burdensome cost aspect to the corporates that who wants to list.
And it will also pay for itself, regardless of whether you have gone to the IPO or not.
Exactly.
Anything you can add to that? Yeah.
There are two things in the long run. My feeling is that there is a clear positive correlation between the long-term share price of a company which is better governed than one which is less governed. There's a very clear thing in that. The second point is, yes, we speak about the voluntary code and a set of rules or self-governing rules which are required to satisfy the general, to get into that space. But let me also tell you, in the ecosystem of investors, especially some of the larger institutional investors, there are some who look for the level of governance way beyond codes before they invest. And I can tell you there is one whom I have had the opportunity of interacting for more than a decade, one of the largest emerging market investors who have been investing in Sri Lanka for more than 2-3 decades. They still insist on, even though the local CSC rules do not insist that for a non-bank, the role of the chairman and the CEO does not have to be bifurcated. It's only for banks. But this particular fund insists that they would not touch, however good the stock is, if that particular attribute is not met for their satisfaction. And I'm also aware of at least one listed company which has chosen, however much this fund is attractive, the company has chosen that it's in its journey that is not an important attribute. So it depends sometimes on the supply and demand for money as well.
Right, of course. So coming back to the chambers that you represent, the 10,000 odd companies, and I think how much of them are actually listed, and coming back to that point.
Well, I guess today we have just over 200, maybe 250. So you are talking roughly, give or take, around 2.5%. Is that good or bad? I would say it depends on market. If we look at our immediate neighbor India, I understand that the Bombay Stock Exchange, which is rated as number 1 in the world in terms of number of corporates listed and number 11 in terms of market cap, has around 5,000 companies listed. And I'm told, I read somewhere, that the total number of companies incorporated in India is around 1.3 million. So you are talking roughly about 0.4% of the ecosystem of companies which have chosen to be listed. On the other hand, you look at a market like Singapore. Again, I'm looking at 2012 numbers. The limited information I have tells me you have just over around 8,500 companies which have been listed in the Singapore Stock Exchange, which have been incorporated in Singapore, of which around 600 odd are listed. So it's around 8%.
Right.
But the interesting thing there is a large component of that is also companies from outside. And secondly, Singapore is very, I think it's quite atypical to Sri Lanka and India, in that of that 8,000 odd companies which are registered, I think close to 5,600 companies are what they call exempt private companies. These are companies with a certain turnover value, I think of 5 million Singapore dollars, which are exempt from the need to have audited financial statements filed, even though they have to file IFRS certified accounts, self-certified accounts, but they don't have the mandatory requirement of having externally audited set of accounts. So they are called exempt category.
But they function as offshore companies, is it?
No, onshore. But I think that particular leniency or attraction has attracted a large number of maybe partnerships and sole traders to incorporate. So that, I think, suits that economy, which perhaps cannot be established everywhere. So I don't think there is a one-size-fits-all answer in this.
Right. So from a project size and then from a company's revenue model size, you talk of size matter. So what would be the ideal size, you would say, for a company or for a project that may seek listing in the market for? You brought that up.
Right. So you're talking about equity listing or debt listing?
Equity or debt, yes.
This is an issue that has been brought up recently also at the Securities and Exchange Commission, is whether the market is conducive for listing of SMEs. Now, SMEs from Sri Lankan standard might be small compared to SMEs of across the rest of the world.
Right.
One of the ideas and thoughts that have been put forward is, could we have another board in the Securities and Exchange Commission for small and medium enterprises, which also reduce the burden on the listing requirements that SEC and CSE has, and also where the listing process is shorter, the efficiency of listing is smoother. So that's a possible avenue to go to get the smaller entities listed. I don't see, at the end of the day, of course, you need to understand that there is an investor when investing. Not the retail investors, I'm talking about the foreign funds, or if you're talking about institutional investors in Sri Lanka, you may need to have a size which is economical for investments. So you may not attract investments to a SME which doesn't have that economics of scale or the economic size of investment that is required. Of course, the retailers will be clearly interested. So in order to manage this, a proposition that possibly can be put forward is to look at another board in the Colombo Stock Exchange, which facilitates listing of SMEs in the stock exchange, and that will be driven possibly by retailers. While at this moment there is no bar limitation on any size of the company is being listed, but in order to get the right value, better value, there may be a requirement to facilitate a stock exchange, possibly a particular board for SMEs.
Right. Thank you very much, Arjuna. Yes, we'll be back shortly after the break. Welcome back to the Going Public. Arjuna, okay, we talked about companies and companies' capacities and reluctances perhaps of getting listed. How about the infrastructure that is available to us in Sri Lanka, the stock exchange? Can it handle, say, suddenly if everybody rushes to list? How would that work out?
As we see it and as we have heard, I think the technology platform that Colombo Stocking has is as modern as any stock exchange in the world. In terms of capacity to handle volumes, in terms of capacity to handle more listed companies, I think there is no doubt that we have the necessary capacity to do that. So I think the requirement is to attract more listings, and I'm quite sure with the progress we are making in terms of economy and in terms of stock exchange listings that we've seen in the recent past, we will have more listings that will come. Now, one of the things that possibly we need to do is to increase the size and the depth and the breadth of the stock exchange. So, if we can
As in having more companies listed.
More companies in terms of larger size companies listing themselves. If you see the apparel industry today, we have fairly large size companies. We have rubber-based tire manufacturing companies, which are fairly large, and these companies, should look at listing themselves. One thing is that will allow them in terms of sustainability to the future, in terms of ownership succession. I think there is a lot of benefit that these companies would get in listing themselves. So the requirement is, if you talk about SBEs, Specified Business Enterprises, that's been monitored by the Sri Lanka Accounting and Auditing Standards Monitoring Board. I think we have something in the range of 1,300 companies there. Now we have today between 250 to 300 companies listed in the Colombo Stock Exchange. So you have a fair amount of companies which are designated specified SBEs who are being monitored by Sri Lanka Accounting and Auditing Standards Monitoring Board, which can list themselves. So I think the route here is to try and get them listed, because the capacity exists, which will also attract foreign funds, foreign investors, to give them necessary scale to invest. So we are hopeful with the emerging scenario that we will have listings of this nature.
Yeah, of course. Now, should we limit ourselves to local companies? I mean, do we have a capacity to handle more?
Not necessarily. I think we should be open, because Sri Lanka has a culture of being an open economy, and is actively promoting FDIs. The Colombo Stock Exchange, I believe, was one of the very first west of Singapore to go paperless, probably more than a decade ago.
Yes.
I think it has some of the better settlement and clearing systems. They're about to go into implementing what they call a delivery versus payment security infrastructure. And I think all this investment is to host around 250 companies, when probably it has the capacity maybe to do 10 times more. And however much you do the incentive in-house, Sri Lanka is a modest market. So perhaps the next alternative is to look at insourcing. And if you look at around us, Singapore has been a very interesting a hub in ASEAN. Dubai has been a very interesting role in the Middle East. But if you look at Southeast Asia, India is a different proposition with BSE, but you look at the other two economies, Pakistan and Bangladesh. They have their own set of internal challenges, but pretty relatively large economies. And I think the current peaceful environment, this was not suitable pre-2009, but the current optimism, the sense of peace, combined with some of the best-in-class accounting, legal, company secretarial support, and settlement and clearing systems and banking support we have in this country, can, I think, be leveraged to a greater effect in positioning the Colombo Stock Exchange also as an insourcing hub for South Asia.
So, you think, other than the exchange infrastructure, do we have the capital market skill set, like Singapore does, the expats, or do we have the in-house local Sri Lankan
I think we
institutions?
I think we do. If you look at the support structure needed for this, you need to have good auditors, you need to have good accountants, you need to have good company secretaries and legal support. And I think that is something which we are not probably short of in terms of abundance. If the right attraction is there, you will see more and more from these professions also retuning their specialization into capital markets. which will become an incentive. So that I think is something we need to seriously think about as a part of a roadmap.
How about another question from the investment banker side of point of view, which you addressed at some point? Again, putting your banking hat, do you see the underwriting capacities? For example, Sri Lanka is not a market that I understand. We don't have the correctly what you say the definition of underwriting. Our IPOs are not necessarily underwritten. It doesn't evolve on the IBs. But why is that? Wouldn't the IBs with a capacity to underwrite, wouldn't that be a benefit for corporates who wants to come out and list?
It certainly does, but I think most issuers at some stage compare also the relative cost of underwriting with their ability to place. So I think they very often with their investment banking advisor look at actively pre-placing before they go and underwrite.
Right.
But maybe as the market evolves into a different paradigm, the journey for underwriting may also change and evolve. Arjuna, you wish to?
Yeah, no, just to add to the infrastructure that we were speaking about earlier. If you talk about the financial accounting infrastructure that exists in this country is world class. This was alluded to by the president of the International Federation of Accountants when he came. We are converging with the international financial reporting standards in terms of auditing standards. So if you talk about the financial and accounting infrastructure, we are world class. So in terms of if anyone wants to come to this country and invest, in terms of infrastructure, I think we are good, and the country risk is now getting lowered, and we are hopefully with the Western world, if the Western world has the capacity to invest, I think this should we should move the capital markets upwards very soon.
And I think also the time zone in which we are based probably is also an interesting connect between the East and West into position timelines in terms of market.
That's right. I think we have a few corporates who are being outsourced as analysts for companies that are in the US and UK, and we see China open, we see Australia open, we see London open before we go into the US. So I think Sri Lanka is that way ideally situated. But coming back to our capital market and our sources, we touched upon the fact that, of course, the stock exchange has the infrastructure. We have the skill set, perhaps even the banking institutions, although personally I believe that the investment bankers here take a free ride, not underwriting the companies, but still bringing the companies without taking that capacity, perhaps taking on the risk.
I would beg to differ. I would say very often the choice is given, but it eventually is a choice which the underwriting, the underlying issuer or listee takes a call on, right? But what I would say is, as the scale changes, maybe the demand for underwriting will improve.
Right. So that will hopefully help the companies that want to get listed. The timing factor, of course, then becomes the burden of the underwriter as opposed to the burden of the issuer, and we will get more companies listing in our capital market.
So one aspect on this underwriting is, yes, you go into the market and say somebody underwrites, but there is another way in which this market gets found, that companies which plan their introduction into the industry, to the exchange. As I said, private equity is one very interesting source. There are also a different group of investors who focus on not necessarily true private equity, but act as anchor sponsors to pre-sponsors to an issue, as long as they understand the story and they believe in that story. So I think they also provide very much that quasi role to an underwriter.
Excellent. Unfortunately, we are out of time. It's been an interesting chat, and we'll hand back to Amaya for the close. And thank you very much for appearing on the show, Arjuna Herat and Mr. Jagaraja.
Thank
Pleasure.
you. Thank you.
And back to you, Amaya.
Thank you, Vasula. There you go, another key player when it comes to an IPO, dissected on today's program of Going Public. Investment banking as a very important factor when it comes to listing your company on the Colombo Stock Exchange. With that, we wrap up this week's edition of Going Public, and we will see you next week with another great episode as well. Till then, take care.